Hey everybody, this is Ryan Mallory. How's it going? Doing a market review, going to go through some trade setups today, take a look at what's really affecting the market, what are the stocks that are driving the market higher, what do we need to look at going into next week. I'm here to knock all that out for you and to give you a little bit of insight into what you should be or should not be trading right now. Now let's look at the S&P 500 from a much bigger perspective here. Let's go all the way back to the beginning of the year here. You can see we've bounced pretty well off of the December lows, and we've ridden that trend line up, but then we broke it in August, and it doesn't look good when you break it. And then since we broke it, we consolidated, and then we tried to break out of that consolidation to the upside. So now we're breaking out to the upside. We're holding this trend line on the 30-minute chart. It's a little bit sloppy. We've dipped below it a little bit on a gap and also on an intraday move. But you also have this bearish wedge that's forming now. That kind of concerns me because now we're also seeing the market hitting its head up against this old trend line here. Over and over again this week, we've seen it. We saw it late last week, and it's not breaking through it. And you also have this test of new all-time highs. Now, what I don't like about the new all-time highs is that every time we seem to test the new all-time highs, we go marginally higher. We go just a little bit higher. But it always results in these huge sell-offs after the fact. So when the VIX gets down to, say, like 11 or 12, you start to see these huge spikes in volatility. You go back to April, you see a huge spike in volatility. And in May, you go back to October, right? We remember the sell-off that happened in October, November, and December. Look at that. Where did it start from? It started when we started settling in that 12 to 11 area on the VIX. So where are we at right now? We are all the way back at 1388. So we're not there quite yet, but it's something definitely worth looking at because you can see there's a huge support level in this 11 to 12 area where the market likes to bounce, or at least the VIX likes to bounce, the market likes to sell off. So going back to the S&P 500, we're back at the highs. The VIX is getting low again. Not quite there yet, but it is getting close to that 12 range. And we're starting to see a bearish wedge forming, so that does create some concern. We're seeing the price movements getting really small, which tends to happen when we're at or slightly making new all-time highs. So I'm a little bit concerned there. But I also think, too, on some of these indicators that we're seeing that there's a lot of room to run to the upside. So I wouldn't count the bulls completely out just yet. I'm still long. I'm not getting short. There's not any like panic selling on the days that we do see some selling. There's not a lot of panic selling, okay? Like today, for instance, we're off the highs of the day. Yesterday, we settled off the highs of the day. But when we sold off the highs of the day, we didn't see a lot of panic selling. We didn't see volume flowing in that suggested people were hopping out of the market, going into safety stocks or anything like that. So I think we're okay in that regard. So let's go ahead and look at the FANG stocks first. Facebook hasn't really done much, hasn't really participated in this rally at all over the last couple of weeks. Check this out. It's got resistance at the 50-day moving average. Simply can't break above it. This is dead money right now. If you're trying to buy it long, yeah, it looks like it might be forming a base, but there's no reason to get into it until it breaks out of that base. Same can be said about Amazon. I've looked at this thing a couple of times. I keep waiting for it. Is it going to break out of it? Technically, it's kind of above that consolidation from August. However, it's got this 50-day moving average weighing on it again, and it's consolidating when the market's rallying. And that's the other thing too right now is that we're seeing the small caps get a lot of interest from the buyers right now, and the big large caps like Amazon, like Facebook. They're seeing a lot of more like suppression in their price. They're not really moving, and so the FANG stocks are not quite as in favor with the market as the small caps are right now. And what you're seeing is a lot of trashy stocks like Bed Bath & Beyond, okay? Stocks that haven't gone anywhere. They're rallying through the roof. And then you're seeing even some of your more depressed energy companies of late, they're pushing and going much higher. Now, what about Apple? I traded this thing. I got stopped out earlier this week for a small profit. It wasn't much. It wasn't as much as I would have liked, but it was still a profit. So I'm not going to go broke, by getting stopped out of it for a profit. But you can see there's a trend line off of the January lows. Remember when in the beginning of January, I remember it pretty vividly because I was in the stock at the time when they came out with like a forecast warning and the stock dropped like 6 or 7%. Okay, so that trend line is in place still. It's still holding it, but then there's another trend line off of the June 3rd lows that's also holding, and that's one to be watching as well. So it's been selling off the last 2 days. Today had like a Goldman Sachs downgrade, I think, where they lowered the target some. I'm not exactly sure, but I'm not in it, so I didn't follow it too much. But what I'm looking at is the technicals on this. And if it can pull back to this 210 area, I think you have a shot at getting long on this and getting a nice bounce. The other way to play it, if you don't think it's going to go all the way down to 210, is to perhaps look at it around 213, 214, maybe even 215 for a potential bounce off of support right in here. So you do have some support in this area here where price has responded pretty well to bounces. So two areas, 215 if you're wanting to be really aggressive with buying the dip on Apple. The other one would be around 210. Now Google, I mean, this thing, you have all these probes, you have all of these people wanting to break Google up and to lessen their influence on the internet. This thing keeps trucking higher, and there's a good chance I think we'll see another push for a 1300 again and test its all-time highs. Now, why does this market keep rallying? Well, look no further than the bonds, okay? The 20-year Treasury bond fund, it just continues to plummet. These bonds are getting destroyed, and I mean, when you see a rally that goes parabolic like this, yeah, it's great when you're on it, but it doesn't last forever. Eventually, the profit takers are going to sell. And it's a snowball effect when you get one of these situations where the price rises parabolic, just like it does in like Beyond Meat or any other stock. When it gets like that, it only takes a couple days of selling before the snowball starts getting really big because everybody's like, oh, I'm not going to hold on anymore. I'm taking my profits. And all of a sudden, it's just getting hammered. And that's what you have right now in TLT. It's just not worth being in. That's also the source for the rally that we're seeing in the banks right now. So you can see, I think you can see TLT come all the way back down to 131.50 before maybe 132 before you have a reason to buy this TLT if you're into the bond trading. So speaking of the banks, let's look at JPM. I haven't gotten into this bank rally. Probably should have. Didn't think that it was going to rally 6 or 7 days in a row. Still strong today. Kind of frustrating I didn't get into it. But the reason why I didn't is because there's so much overhead resistance here. And it broke through it today. But you can see, I mean, time again, it's tested this resistance level. You can see multiple points here and then again here. And it couldn't even get to the resistance there. I mean, there was another little sub-resistance level there at 117. It broke through it yesterday. Then, of course, you got the one at 118. It broke through that today by gapping above. So the rally's been really impressive. But, I mean, I didn't play just because I didn't have a lot of faith in the technicals. I didn't like the resistance overhead. I felt like it squashed the ability to have a reasonable reward to the risk that you're taking on. Of course, it broke through that resistance. Pretty impressive. Kudos to it. And if you take a look at bank, similar situation there. But still some heavy resistance lies overhead for it. I definitely wouldn't be trading it at this point. There's some resistance at 31. Yeah, sure, maybe it breaks. But this thing has rallied a good deal. Over 10% since late August. And so if it does break through 31, do you really want to be buying it at that level, assuming that it's going to keep on trucking after it's that overextended? No. What you want to do is you want to wait for some consolidation to come in and then provide you with a better reward to risk trading opportunity. So remember, we've talked about parabolic, right? Things going parabolic and what happens after they stop going parabolic. We talked about it in TLT. We have the same potential for that to happen in like the bank stocks if they continue to rally like what we've seen. Eventually they're going to sell off. When they get parabolic like this isn't the time and place to be getting long on it. Now let's go ahead and get into some of these stocks that a lot of people are talking about and what's really headlining the market today. First, you got SHOP. Got out of this one at 351 today. I was kind of depressed about it because I didn't want to get stopped out of it, but I did. I got knocked out at like 351. It's down to 341. So obviously it was good to get out. I raised my stop loss, took a 2.2% profit on it. I was hoping that maybe we could get a push back to 380 before it saw any kind of significant pullback. Didn't do that. Just too much resistance overhead. There's people just continuing to book gains in it. And now I think it may go even lower. So where do you get into it at this point? Well, if you look at the rally off of the February lows going back to 2016, there's a solid trend line there. And it hasn't tested in a long time. So could you make an argument that maybe over time it'll come back to this one? I don't think it's going to hit it tomorrow or the next day unless you have some just catastrophic news that comes out about it. But perhaps it comes back over time, and that's where you want to get back in from a long-term investing perspective. Now in the short term, it's breaking through all sorts of moving averages. It's not finding any support anywhere. There's maybe some here at 340 that it can hold on to if it can. Maybe it bounces there. There's some support right there that could keep the stock from completely falling all over itself. But right now, I'd stay away from it. Here's another trade that I'm in right now. BABA. I've had a love and hate relationship with this stock. So far in 2019, BABA's been pretty good to me. It's got a double bottom that's really intriguing. It's showing some solid relative strength today. It's only up 0.5%, but for the most part, it's been flirting with that 180 level today. If we get a rally into the close, maybe we'll revisit that level again. But it's a pretty solid chart. I like it. I think it's trying to break out. You know, 179 is where I kind of marked the breakout level at, and it's holding that level today after it gapped above it. It's going to have a really solid run here if the market can hold up. I think 190 to 200 could be an easy target price for it if this market doesn't sell off and there's no crazy China news that's coming out of the White House or out of Beijing. Now, you got a lot of people talking about overstock. I've never traded this stock. At least I don't think I've traded this stock. If it was like 5 or 6 years ago, and I don't even know, was it even around 5 or 6 years ago? Yeah, it was. But inverse head and shoulders pattern on this stock. Again, this isn't really a trade for me to take on. It's kind of out of my wheelhouse in terms of taking on too much risk. But the volume is pouring in. It's pouring in a lot. It's gone from 15 to 26. Now, yes, it's close to breaking the inverse head and shoulders pattern. And yes, it actually broke it intraday today. But now, do you just get long on it just because it breaks that intraday head and shoulder, or the head and shoulders pattern going back to January of 2009? No, you don't buy it right away because look, again, it's parabolic, it's overextended. You're trying to buy a stock here on a break of this neckline at $27.60 when it was just at $15 earlier this month. Don't do that. You got to let this thing calm down, settle in a little bit. If it doesn't do it and it keeps going out, okay, it defied the odds and it kept going up, okay? But you can't manage risk at this level. I mean, the only way I could do it is if I put a stop loss below the 5-day moving average and said, okay, if it breaks the 5-day moving average, I'm out. Well, this thing could swing easily below that 5-day moving average on an intraday move quite quickly, okay? It could do it before the end of the day today, and I'd be stopped out, but I'd be taking a massive loss. I mean, I'd be taking like a $5 loss on a $27 stock. That's like 27, or that's almost 20%. You don't want to do that. So calm down. I know the technicals on it look pretty good, but the risk reward is horrendous. Don't do it. Now, what about BLDP? Now, people are going to be saying, look, it broke the September highs. This is a $5 stock. Again, it's kind of like OSTK. There's a lot of volatility in these plays. You've got to be careful. If you're going to play it, you need to play it on a pullback to some kind of a support level or on a breakout of some kind of consolidation. But when it's up 6% today, and let's be frank, a couple of days ago it was at 460. So it's up 25% right now. I can't stress enough that you have to wait for good opportunities. You can't just buy it just because it's going straight up. Now, if you were to have gone into it, the ideal place to have gone in on it would have been on this bull flag pattern here where it broke out yesterday. You could gone in at $5, put a stop loss at 481. You have about a 4 or 5% stop loss there. It's at 540. You're making this at least 2 to 1 at this point. Now, Blue Apron, again, another stock I've not had any need to trade yet. It hasn't provided me with a good trade setup. People are probably getting excited because it's made a move from the 6s up to almost 9. I don't see any kind of technical development there. Maybe you have a double bottom right there, but this is a messy chart. You've got a lot of upper shadows that make it very difficult. You have huge price swings, and we were just talking about it. On the last chart, you get these big intraday price swings that, okay, we've just seen going back over the past hour, a 10% move to the downside. So if you got in at, let's say, $10 or $9.90, you've already seen a 10% swing against your position. That's not the kind of stocks that you want to be trading. Yes, it's got volatility, and yes, it's got a lot of momentum one way or the other, but you're not controlling the risk, and that's the big problem. Now, AMD, despite NVIDIA being down today, AMD, and you also have AVGO down today, and you have a lot of the semis down today. AMD is holding up pretty well, really well, actually. The problem is that it's just stuck in this consolidation going back to last month. It really hasn't done nothing. It's got some resistance at the 50-day moving average, but it's just it won't move out of it. So I don't think you can get long on it at this point. I don't think there's a trade setup. Technically speaking, now the risk reward is actually pretty good because you can put a stop loss below Wednesday's lows, but the technicals aren't there. So you need both the risk and the reward and the technicals to be there for you to get the trade setup that you want. You only have one of the two in AMD. Cars, now you got a nice rounded bottom here, huge gap that's been unfilled so far. The way I would play this, wait for an intraday pullback to the $10 level, put your stop loss below the lows of the last 2 days, which is 966. It's the same on both of them, so it's actually a nice place to put a stop loss. Maybe put it at 964, get in at 10, maybe 1010. See if it'll bounce back and ride it. You've got a good risk to reward there. You got a setup of a nice base where it's trying to come out of that base, push into the gap, Again, wait for it to pull back some. I don't think you want to chase it right here when it's up 7% on the day. Wait for it to come back some, maybe even to like 1027 or 1030. Finally, let's talk about AVGO. I just mentioned it when I was talking about AMD, but it's worth a talk here. You have a declining trend line off of the May highs, and it broke it yesterday. Then it had earnings, and then it sold off. But look, it's trying to make a pretty decent effort here to climb back out. But from a longer term perspective, you also have this triangle pattern that it's kind of been stuck in. So even though it sold off today and people bought the dip, I'd probably wait for it to get back above today's highs before I took a long position in it. Now the stop loss gets a little bit trickier because if you get in around, like, say 298.50, your stop loss is going to need to be around 287 and change. That's the best way that I would play it. It did fill this gap, so really it's responding very well technically on the chart. Filled the gap, got bought up, and so I think there's some room to still run in this particular stock. So that's going to do it for today. I appreciate you tuning in and listening. Be sure to like and subscribe. And also check out my swing trading community. Man, it's awesome. The Swing Trading Splash Zone at SharePlanner.com. It's a great community of traders. We're in there every day. We're sharing ideas, bouncing ideas off of each other's heads. I'm providing my real-time trade alerts via text, via email, via chat, via WhatsApp. You name it, I probably can make it work for you. So a lot of people in there every day. We're all working together. We're conquering these markets on a month-by-month basis and a day-by-day basis and even a week-by-week basis. We're trying. Doesn't mean that we're always profitable every day. Not every day is going to be a winning day. But on the whole, we're doing pretty darn good, and would love to see you there. Thank you. Take care. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splashzone. Thanks and happy trading.